First of all, at Sanlam Alternative Investments, as a business, our purpose is to create lasting value by unlocking potential in emerging economies. And Africa's core to this. So Sanlam's present in 27 countries. A meaningful proportion of the group's earnings are derived from Africa. And we committed to investing in its long-term growth, its resilience, and its prosperity. So I think there's three main principles that are kind of driving our strategic priorities. Firstly, we want to leverage Sanlam's convening power. So that's bringing aligned stakeholders to the table, using our collective platforms, our networks, our voices to promote the continent and its potential. And we really want to partner to structure real pathways to capital that flows into scalable solutions. Second principle, we are driving and building a Pan-African investment platform, one that enables long-term institutional capital, specifically one that drives capital towards real economy projects and businesses at scale. It's a word I repeat often. Scale is important in terms of what we believe is needed for the continent to develop. Third principle, innovation. We want to design ways to attract and to retain capital on the continent. So not just bring it here for the short term. And this isn't necessarily in how we kind of put together investment strategies, but also we feel it's important that practitioners package it to align with global demand and in particular institutional access. If you think about our approach historically, we've had a global pioneer in the form of our subsidiary business, Climate Fund Managers. One way that they've kind of been able to drive investment into the green economy is by innovative structuring through whole of life financing. So delivering climate infrastructure in emerging markets faster, stronger, larger, cheaper. Examples being Climate Investor 1, Climate Investor 2, they've managed to scale and deliver $2 billion funds, which are based on blended finance, the latter being the largest climate adaptation fund in emerging markets to date. And close to home, two energy transition funds focused on green hydrogen, recently launched in Namibia and in South Africa with meaningful support from the European Union. Those are pillars that we want to promote, technology and examples we want to bring more and more into the frame across the continent. In 2026, we want to turn ambition into tangible outcomes, really pathways to scalable platforms. So that'll be needed to have more global LPs at the table. We want a stronger investment voice. We want to be able to align the opportunities with capital and with the mandates of those global LPs. We want ambitious partnerships. It is absolute joy to have the likes of the African Union and AFDB as sponsors of this event. Jointly and with others, we want to be able to partner on initiatives that create and unlock systemic solutions. We want to move from fragmented deals to scalable platforms, so focus on scale, permanence, replicability. And I would say the bottom line is conversion, more MOUs moving to commitments, more global institutions interested in anchoring Africa platforms. To institutional investors who are hesitant to enter the space, I would say Africa's green economy is not a concessionary or an impact story. It's a diversification and a yield story, and it's underpinned by structural growth. That's growth that's built on global demand, which itself is driven by future technology, sustainability, and the associated resource that will drive those. I would also add that the opportunities are attractive, they're plentiful, they span the full asset class spectrum: infrastructure, private equity, real estate, credit, nature-based assets. And you will find trusted partners with strong governance. Africa is investable when it's backed by managers and institutions that are based in market, that have institutional grade oversight and transparency, and these partners are available. I would also say it's around institutional vehicle level access, the ability to find and invest into diversified pools of assets, particularly at scale with increased palatable liquidity. These are elements that we know that institutional investors globally demand, and it is definitely something that is able to be delivered. And maybe finally on this point, I would say that perception is not reality when it comes to risk. Risk is often overestimated, and even if it is overestimated and misunderstood, I would say where risk is mispriced, it actually creates an opportunity for investors, particularly those who want to engage early, they want to understand the context, and want to structure accordingly. So come on the journey with us, engage, understand actual risk, gather data, inputs, or even co-create solutions that fit your mandates. Just build conviction in the jurisdiction, because you will be rewarded and you will be helping with the development of the continent. The Debt for Nature swap in Galapagos was really exciting because it was the largest ever Debt for Nature swap of its kind globally. Around $1.6 billion in debt was restructured, but also because it secured long-term, in fact perpetual funding for marine conservation. We're very focused on trying to bring some of those principles from that model into structured solutions that are fit for purpose for the continent, and in particular where we can look to implement them through the private sector. So I'd say there's three focal areas for us. We want to create scalable platforms and programs, not one-off subscale transactions. We want perpetual impact. So those are instruments that can build sustainability and conservation over the long term. And we want to find ways to support profitable, resilient businesses in the blue economy, so in ocean and coastal sectors. We think Africa is ripe for this. Africa should be a natural partner to help achieve the global goals for climate and biodiversity. Obviously, abundant natural capital, but also an innovative and willing private sector. At Sanlam, we think we have a role to play in convening partners, designing instruments, anchoring platforms that deliver both conservation and capital returns. I think there are many elements where it's well known what role blended finance and DFIs play in terms of galvanizing investment into Africa. The ways like helping to turn unpalatable frontier risk into investment grade exposure, whether that's using guarantees or subordinated layers or hedges and the like. We know that DFIs help validate new sectors, whether that's green hydrogen or the blue economy or other nature-based solutions. But increasingly, I think the role is to help structure tools and vehicles that unlock scale and bring in private sector capital at scale, and also enable access to the broader capital markets. I think there's some good examples out there which are innovative, more recent, have been applied in other jurisdictions, and can definitely be brought closer to home. A good example would be climate fund managers in their most recent final close of their second fund, Climate Investor 2, introduced a bridge to bond mechanism. The purpose of that is to open up climate adaptation infrastructure assets to bond investors who typically require not only the scale but the liquidity in order to be able to invest. So in the bridge to bond mechanism, the structure was effectively a bridge loan provided by Sanlam Alternative Investments, which was backed by a guarantee from the European Commission. And that's allowed institutional investors to be able to access the underlying assets in a format that they can hold. And that will effectively be when that bridge loan is refinanced by a climate bond issuance. Why it matters is what it does is transforms early stage blended finance into mainstream investable instruments. and it aggregates the smaller, high-profile, higher-impact projects into a bond-ready portfolio. So it's really exciting the ways in which DFIs can participate to demonstrate how that concessional capital and the guarantees can help unlock private capital at scale and really support the development of the African continent. I think first and foremost, it's important for everyone to better understand global mandates, not to change the underlying investments, but to package them in ways that align with how institutional capital assesses and accesses opportunities. And that, for me, is the game changer in terms of accessing the next wave of green investment opportunities in Africa. I think we have to also ensure that what's investable for global capital also drives African development, whether that's industrialization or intra-regional trade, that values retained on the continent. There's an emphasis on job creation and on resilience. I think those need to underpin the next stage in the development of the green economy. But if I was to pick three specific areas, I would want to base them on scalability, on the return potential, risk mitigation, and alignment with global trends. So those three would be critical raw materials. Africa holds the key reserves for green technologies like electric vehicles and solar panels, batteries, and the like. And those are all foundational to the green energy transition, and they offer strong export potential for Africa. The second would be data centers and digital infrastructure. Clearly, that's based on the rising demand from AI and fintech and cloud computing. And energy-efficient builds are going to be green, and they're going to be investable. The last would be green industrialization. So I think for investors, the opportunity is going to be in financing enabling infrastructure, industrial parks, and the like that really underpin the growth and also will enable value chain integration for global corporates as well. I think that while each of these are compelling opportunities in and of themselves, we must ensure that we build in ways that retain value in Africa. Growth needs to fuel local development, and it needs to fuel long-term prosperity, not just exports.